As long as I get something that's higher than 5%, I'm okay with that. Lower dips for this would be, I think, an opportunity for you to be able to purchase and would give you a higher dividend yield as well. At any given point in time, dividends could easily be slashed. There's a large chunk of that space already that has been eaten up, in my opinion, by social media. Hey guys, so in this video, I want to double down and talk about dividend investing in times like this where there's a lot of uncertainty brought about by the pandemic, the virus, and the lockdowns as well. So for those who are new to this, I'm a very, very big fan of dividends. And my style is when I trade, when I invest in growth stocks, and I start to profit also, what I normally do is I take some of those profits, use them, and buy stocks that will give me dividends. Because as you all know, the name of the game is to buy stocks that will give you cash flow, because as they give you cash flow, it will be passive income for life. As you hold on to that position, no matter how long it is, you get cash flow that you can predict, that you can expect, that you can use also sa pang-araw-araw nyo na gastusin. And that's what I like about it. So the way I look at dividends is basically, it's my rental income. I'm not a massive real estate person, but the way I can collect cash flow is instead of just buying property and have that rented out, the name of the game for me is I buy stocks that give me dividends and then collect the dividends and use those dividends in whichever way I want. Now that being said though, because we are in the midst of uncertainty right now while this video is being recorded, the whole narrative is you have to be very, very selective also on the companies in the stocks that you would buy that gives out dividends. Why am I saying that? Because some of the companies that got massively hit, either they lost money for 2020 or in the midst of the pandemic, their income was slashed massively, or there's a projection that they may not do well over the next few months, that they would want to store cash. Meaning, when companies' income get threatened, they will normally slash the dividends, and that's what we've seen. So you have to be very, very selective in the companies that you are buying if you are a dividend investor, meaning you want to buy the ones that their dividends may not be threatened, because the whole point of you buying these stocks is you want the predictability that they would give. Now, that being said, just take a look at some of the stocks that definitely the ones that are connected to travel, definitely the ones that are connected to tourism, definitely the ones that they're also connected to property development. A big chunk of them, their dividends are not as much or they've been slashed. I've been very, very consistent in the stocks that I've been mentioning to you that I like in terms of dividends because I see predictability in them. And that being said, it's so interesting to look at them right now, by the time this is being recorded, March 21, 2021, because a lot of the stocks in the PSE have dropped. The techniques of dividends is you want to buy them while they are lower because it increases your dividend yield. The lower the stock price, the better the dividend yield will be for you. And that's where people like us who love dividends would start to come in, because as long as we know the company will be resilient at times like this, as long as we know the company will still be able to earn more and give out those dividends, then dropping prices would be a very, very good opportunity for us to start to earn more. Please remember that you need to know the fundamentals of the companies that you're buying, so that should there be larger drops, you won't be scared. Should there be larger drops, you will have full conviction on what you're supposed to do. And then again, please, if you're new to this, never ever buy a stock just because I talk about it here on YouTube. It's your money, it's your responsibility. You have to take the time to learn. I want companies that are predictable. If you've watched my previous videos, it's still consistent. Globe Telecoms, PLDT, I really believe that in the midst of the lockdown, more and more people would still be wanting to use their services, that there will be a heightened demand for whatever they're also giving out or producing. That being said, by the time this video is being recorded, Globe's stock price hit a low of 1,870 pesos per share. And just looking at what they gave out from last year and also what they gave out for the first quarter, this is at least my computation. I could be wrong. It could be higher or lower than this. Possible dividend would be around 107.99 pesos. 107.99 pesos divided by the last stock price at 1,870. That would give you a dividend yield of at least 5.77%, which is high, which is good. As long as I get something that's higher than 5%, I'm okay with that. But the higher, the better. And that's why there are some stocks that I like, in my opinion, that give consistently high dividends, but not just that, that their prices are lower. Please ask yourself also that, will Globe's earnings be predictable this time? Are they affected? Should there be a lockdown? Will they be affected? Should there be more cases? If the answer is no, then most likely them giving out dividends would be very, very consistent still. And then also look at the trajectory of where e-commerce, streaming, and everything that needs the internet will be. In line with Globe, I also want to talk about another company that's connected to data and telecom, which is PLDT. PLDT last Friday, massive drop. I think it was down around 7%. And because it was down by 7%, the stock price hit 1,195 pesos per share. From last year, they gave around 77 pesos. My assumption is they already gave 40 pesos for their March dividends. I want to make an assumption they're gonna give 39 pesos for the remainder of the dividend that they would give out this August. 79 divided by 1195, dividend yield for that would be around 6.67%, which is high also. It's even higher than Globe, higher than our 5% projection. Globe gave out already one tranche of its quarterly dividends, then PLDT gave out already the first half of what it's giving. You won't be able to get this percentages that I'm sharing to you. What you will get though is where they will be should they give the same amount of dividends for next year. But it's a good way for you to position already on companies and stocks that you know will have very, very good dividends. Next in my list is a Reit. As of the last trading day, hit 32.65 pesos per share. And I'm just assuming that they would give out 1.5 peso dividend for 2021. It would give you a dividend yield of around 4.6 pesos per share. And as you all know, we have predictability for a Reit. Predictability in a way that their tenants are locked in for a very, very long time. I think it's around 5 to 7 years that a large chunk of their tenants have leases there. And in the same way, they're fully occupied. I think it's around 99% occupancy. So that being said, 90% of their earnings they could give out as dividends. That gives you a notion that predictable too, that they could give you a yield that you would want, especially if you're after cash flow. Just to note though, that at 1.5 pesos per share, just to note though also that its current stock price, it's lower than my 5% benchmark that I would want. So lower dips for this would be, I think, an opportunity for you to be able to purchase a Reit and would give you a higher dividend yield as well. Similar to PLDT and Globe, a Reit already gave out one tranche of its quarterly dividend. So again, the full year's computation that I have, you will fully appreciate it for next year, assuming that they give the same amount of dividends for today. So if you notice the trend no, of what I'm sharing is, what's very, very important is you buy the ones that are predictable, because at any given point in time, dividends could easily be slashed. That's why it's so important that you know the business model, you know the company that you're buying, you know what's going on, because as you start to know what's going on, it will give you the confidence also that when stock prices drop, as long as the dividends are there, then you don't have to be scared, that you can wait so long that as long as they're giving you your dividends, you get your cash flow, you get your predictable income, you get your multiple dividends for life. Next two on my list are utility companies that are highly connected to energy. Although these stocks as of last week didn't really go down as much, I'm just placing it here again because you can research them should you see stock prices of these two stocks go down later on. I'm talking about Meralco, which closed at 280 pesos per share, and with a dividend that I'm pegging at around 15.905 pesos, you get a dividend yield at 5.68. So please do note also that 5.68 is decent. 5.68 is already good. Given that they were not really sold down last week, it gives you an opportunity still to get a very, very high dividend yield. At this point in time, no, time deposits, bonds are very, very low. The difference that I forgot to mention is as you're buying stocks like this, these are not preferred shares. Totoo, meron siyang volatility. Totoo, meron siyang chance na bumagsak. However, assuming that they remain to be good over a longer period of time and assuming that they increase their dividend yield over a stretched period of time, it means that there's a shot also that you will get capital appreciation for this. It means that as they give higher dividends, the longer you hold onto it, the better the chance also that there would be capital appreciation. Next one is SPC. I've been patiently waiting for the stock to hit a lower price point so I can again swoop in and then buy the stock at a lower price, giving me a higher dividend yield. But it doesn't seem to happen eh. Please do note also that SPC has gone up massively, but even though it has gone up massively comparing it to last year, the dividends that you will get from it is still very, very high, still very, very attractive. So as of 10.5 pesos per share, assuming that they give 0.8 pesos or 80 centavos dividends, your dividend yield as of now would be 7.61. So which is something that's very, very high, even higher than Globe, Reit, Meralco, and PLDT as well. So it's not super, super liquid, meaning if you want to put volume on it, it will take some time for you before you would get to accumulate what you want. But this is a solid dividend paying stock as well. Lastly, I want to talk about two stocks, but yung first one, GMA7, please do your research on it. Historically, they've been really giving out large dividends. It's just that in terms of where media is going, there's a large chunk of that space already that has been eaten up, in my opinion, by social media. In terms of predictability, I don't know how predictable they will be in the next few years, but what I do know right now, last year, the previous years, and even now, their yields are still relatively attractive. But please do your research on that. I want to end with Aboitiz Power because this is something that's, in my opinion, predictable. This is something, in my opinion, what people still need. You can lump it up with Meralco and SPC as a power company, as a utility na kailangan siya bayaran ng tao because it's a basic necessity. Now, Aboitiz Power closed at 23.05 as of the time I'm recording this video, and assuming they give out a dividend of 1.47 pesos, your dividend yield is also relatively higher at 6.37 pesos per share. And that's what's interesting about it. So the moral lesson that I want to share to all of you, that in the midst of uncertainty, when you have dividend stocks and you know the fundamentals of the companies that you're buying, that hindi sila mawawalan ng benta, that they will still be resilient, then you should not be scared of the drop because you still get your cash flow. And if you have cash, you get to position at a lower price, giving you a higher shot and a higher sense of getting more dividends even later on, especially if the income of the company is predictable. If you want to know more also about preferred shares, please put it in the comment section, comment preferred, and I'll try to make a video on that because that's also a very, very good source of cash flow, and I could do a deep dive for you on that. And this is so special for me, cash flow, because when markets were dropping last year, I knew that I would still have an amount of money that I could expect that would come my way even if the market continued to drop because of the cash flow that dividends would provide. So trading is amazing, positioning for growth stocks is amazing as well, but I like dividends because of cash flow, and cash flow for me is the game. So there, if you want to know more about technical analysis, I have Zoom online course happening this May 2021. The link is in the description below. If you want to grab a copy of the 5 books that are best-selling books, the link is in the description as well. And if you want to know more about the markets, I've created thousands, di naman thousands, but more than 1,000 videos here in YouTube to talk about it as well. And for those who want to trade US markets, for those who want to trade cryptocurrency markets, I have brokerages in the description that you may check out, which will allow you to be able to trade, to be able to invest, and to be able to position there as well. Maganda rin pala, nakalimutan ko sabihin, maganda yung cash flow na pwede nyo makuha from cryptocurrencies, especially for the ones that are lodged via a broker. As you can see, no, that even in the midst of uncertainty, even in the midst of crisis, there will be opportunities for you still to make money. There will be opportunities still for you to grow. There will be opportunities still for you to be able to make your money work hard for you, because at the end of the day, that's the game. Investing is the game. It's a bit scary, it gives you a shot that possible because of the volatility you may see in paper your money go lower, or when you sell it at a loss you could actually lose money. However, better do that in the prime years of your life than play catch up later, because at one point or another you will still have to learn to invest, because at the end of the day, you cannot rely on one source of income. You cannot rely on active income. You cannot rely on income that kailangan nyo magtrabaho habang buhay, kasi hindi naman kayo pwedeng magtrabaho pag 80, 90 kayo in the same rate that what you're doing right now when you are in your 30s. I hope you guys got a lot from this, and I appreciate it if videos like this, if you can like, share, subscribe, share this to your friends, press the like button, hit the bell to be updated every time I come up with new content about investing. That's it for now. This is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.